Excuse me, sir.
Yes, Tina, get in.
Sorry to interrupt you, sir. These days we are getting a lot of real estate queries, not only on emails but on Instagram too. Since we had planned the video for next week, I feel this is the right time. What do you think, sir?
Yeah, Tina, I'm a bit busy with other stuff, but it's a responsibility to handle this question and answer session immediately. Just give me 5 minutes time, I will be ready. Hello everyone. We have got many questions regarding real estate in our Instagram page, out of which few important questions have been filtered, and I am going to give answers for those questions. Let us start with the first one. Can I invest rupees 10,000 in real estate? Nice question. Yes, you can invest rupees 10,000 in real estate, but you cannot directly purchase the property. Instead, you can invest in real estate investment trust. And let's go with the second question. How do I determine if a property is a good investment? It is also a wonderful question. A good investment property is located in strong market, wherein the market will be in the expansion phase. It will generate rental income and appreciates in value over time. These factors ensure steady earnings and minimize risk. Let's move on to the third question. What is the expected return on investment in real estate? Yes, it is very vital. When we are going to invest in real estate, we should determine what would be the return on investment for that particular investment. So, the expected ROI in real estate typically ranges from 8% to 12% for rental properties and 18% to 30% for property flipping, depending on location, market conditions, and management efficiency. And the fourth question is, are there any government rules or approvals needed to buy property in India? Yes, of course. Buying property in India requires compliance with RERA regulations, title verification, and local authority approvals, such as building plan approval and land use clearance. Buyers must also pay stamp duty, register the property under the Registration Act of 1908, and conduct legal due diligence. If you are an NRI, you can invest under FEMA rules, but foreign nationals have many restrictions. Now let's see the fifth question. How does the Real Estate Regulation and Development Act, RERA, protect investors? The RERA Act 2016 ensures transparency, accountability, and timely project completion in real estate. It mandates that builders register projects, disclose details, adhere to strict regulations, and compensate buyers for delays or fraudulent activities. So, RERA protects investors a lot. There is no question on it. Now, let's move on to the sixth question. What are the tax implications of real estate investment? Listen, in India, real estate investors must pay capital gain tax when selling a property. There are two capital gain taxes. One is long-term capital gain tax and another one is short-term capital gain tax. Let us learn about long-term capital gain tax at first. It is 20% with indexation and 12.5% without indexation. Now, you may have this doubt. What does mean by indexation? Let me clarify it. Indexation is a method used to adjust the purchase price of an asset to account for inflation. It helps reduce the taxable profit when you sell an asset by factoring in how much the value of money has changed over time. Then the second one is short-term capital gain tax. Here it follows your income tax slab. And the final income is rental income. It is taxed as per the investor's income bracket. However, investors can claim deductions on home loan interest under Section 24 and principal repayment under Section 80C. These deductions help reduce tax liability and maximize investment benefits. Let's go with the seventh question. How do I evaluate whether a real estate investment is profitable? Yes, nice question it is. To assess a real estate investment's profitability, check key metrics like return on investment, cap rate, and cash flow. Additionally, analyze location, market trends, financing options, and tax benefits to ensure long-term growth and profitability. Let's see what is the 8th question. Which is better, fixed deposits or real estate? Fantastic question. Real estate offers higher potential returns and long-term capital appreciation, but comes with higher risks and lower liquidity. On the other hand, fixed deposits provide safety and guaranteed returns with lower risk, but they typically offer lower returns compared to real estate. Now let's see the 9th question. What is the best real estate investment strategy for beginners? If you're just getting started, consider these beginner-friendly strategies. First one is rental properties. Here you can generate steady passive income. And the second one is income-generating housing or live-and-rent strategy. Here you live in one unit while renting out the others. And the third one is REITs. It is also called as real estate investment trust. If you invest in REITs, you don't have to manage the properties, but you can earn regular rental income. And the final one is flipping properties, wherein you will have to buy, renovate, and sell properties for a substantial profit within a short span. But it requires more experience and capital. So each strategy has its own pros and cons. You must choose in line with your inherent risk-taking ability. Now let's move on to the 10th question. Buying versus renting. Which one wins? Good. If you want stability and plan to stay in one place for a long time, then you should choose buying a home because it is an investment that helps build wealth over time. On the other hand, if you are unsure about your future, you should go for renting because it requires less commitment and you can move easily without the hassle of selling a property. And the 11th question is, which real estate investment strategy is best? Flipping, renting, or REITs? It depends on your risk appetite and financial goals. When it comes to flipping, it offers quick profits but requires market knowledge and capital. When it comes to renting, it provides long-term passive income and property appreciation. And the REITs allow indirect investment with lower risk and higher liquidity. The best option depends on your budget, experience, and investment timeline. Now let's cover the 12th question. Which land is best to buy, village or city? Nice. Whether it is village or city, a land which is located in the expansion phase of a local market is the best land to buy. Let's see the final 13th question now. Can you share your thoughts on Indian real estate market as the prices are crazy high at this point and every time? Listen, real estate is one of the essential needs of people. Due to the increase in population and rising income, India's real estate market is continuously expanding. Based on the eternal demand, the prices are always going high. This is the right time to make profit through real estate investments. So don't miss it. And that's it for today's question and answer session. If you still have doubts, comment below as I will cover your questions in the next video.